Well, hello, everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong. I'm a coach with Schwab and delighted that you are joining me here today. So what's on the menu for today? We're going to talk about a sector that we have not talked about a ton lately. It's the energy sector. We're going to look at stocks that are breaking out, and we're going to look at a strategy called a buy right covered call and some different reasons that an investor might look at a strategy like this. We may, depending on time, also talk about what to do if a buy right covered call isn't an option and why it might not be an option. So that's what's on the menu for today. I've got the fantastic Mr. Kevin Horner in the chat with us today. He is a friend and a fellow coach. And if you are not following both him and I on X, you are missing out, my friends. Kevin Horner CS and at Barb Armstrong CS. And just know, I kind of went around the block, and almost every coach right now has an imposter in one form or another. And so just if you weren't clear, because I met someone who almost fell for a scam in Dallas last weekend, we will never reach out to you and offer you private education for a fee. We will never offer you a killer Bitcoin or crypto deal. We will not offer you, and this is the scariest one of all to me, please give us your account info and we'll sign in and trade on your behalf and we can split the profits. Yeah, no, these are all scammers. So just know that I want you to stay safe. And so there's nothing like the real thing, and we're all worth following. Just know that we're never going to reach out to you privately. Okay. Yeah, somebody said, Josh said, my imposters don't give good advice. Yeah, there's nothing like the real thing, right? Right. Okay, so just before we get into the thick of things today, and as always, I have a lot I want to cover, but know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab, and not all will qualify. But I don't want you to be, killing it in paper money and finally be ready to place a trade in your live account, and then you go to place a trade and it won't go through because you haven't applied. So know that there are some nuances and differences, but paper money looks like, smells like, feels like real money, but it's not. So it's a great place to hone your skills and to practice. And it's the paper money software application on the Thinkorswim desktop platform that we will be using today. One of the differences is that short options, can be assigned at any time in a live account. Have I seen that happen? Yes. Did it freak me out the first time it happened? Yes, that's why I talk about it a lot. But know that will never happen in paper money. So we talk about it, we just don't get the chance. We just don't get the chance to practice that in paper money. We don't see that happen in paper money. Okay. I've got two quick announcements. We're going to spend very little time on the market overview. And why is that? Because Kevin Horner and Brent Moores did a bang up job of that this morning when the market opened. It's available in the archives. So if you want an in-depth review, go and check that out, please. Our focus today will be on two things. One, placing new trades. And then we have two trades that require some management. So we're going to look at those also. So announcement number one is that, times are changing. Think David Bowie's like changes. So, and one of the changes that is coming is with this class. So next week, I will be teaching this class as I have, I think, for most of this year. But coming the beginning of October, so October 8th. So next Wednesday, which is the first Wednesday in October, I'll be teaching. And then I am going to pass the baton over to the highly capable Rachel, who is new on our team. And she is, I'm sure, going to do an absolutely amazing job. And so I'm looking forward to, being on the sidelines and getting to watch her do her thing. And I'm sure you guys are all going to love her. She is a more recent addition to our team, but she brings a wealth of experience with her. So that starts on the 8th. And if you want to see this, I will put this in the chat. But it will also be in the show notes down below. If you want to see the whole schedule, this is a great place to see it. The second announcement is with respect to in-person events. And the week after next, Ben Watson and I and a host of others, I mean, we literally fly people in from all over the country. We will be convening in Chicago for the next market drive. We did one last weekend in Dallas, had almost 1,000 people there. And we go from, looking at what's happening globally in the markets, how things, Fed speak and what's happening with interest rates might affect the market, what sectors are stronger or weaker, and right down to looking at individual stocks. So that's the market drive. We'll have a coffee on and breakfast in the morning. We'll provide lunch and a great reception at the end of the day where you can connect. Andrew is asking if we will be treating this as a sister class to trading a smaller account. She will not. She will not. So, I'm kind of like, that's a little bittersweet for me. I hated to give this class up for that reason, but sometimes we just have to share. So next weekend, the market drive, and then we've got a 2-day event coming up in Orlando, and followed by a market drive in Anaheim the weekend before Thanksgiving. And now, like every event through the end of the year is open for you to register. And if you wonder what's coming up in the first quarter, wonder no more. We've got the entire first quarter schedule loaded. So, feel free to peruse that. Registration isn't open yet for the in-person events in the first quarter, but you can certainly put them on your calendar and keep checking back. Okay, so that's that. Next 3 events coming up. Alrighty, so let's get out, have a quick look at the market. S&P 500 down for the last 2 days. Do 2 days a downtrend make? Yeah, no. 3 days ago, this market hit a new all-time high, still trading above. This blue line is the 10-day moving average, and the red is the 30. Now, some people, prefer the 10 using the 20 and the 50. This black line is the 100, but I mean, it is still, some might say, is this a bull flag setting up? And it sure could be. Yeah. NASDAQ. Somebody's asking what I'm going to teach. I'm traveling a lot with the in-person events team. And then I'll also be teaching trading a smaller account Mondays and Fridays. I'll be teaching getting started with technical analysis, and I'll be filling in a lot for those that are on vacation. So here's the NASDAQ, again, hit an all-time high a couple of days ago and, pulling back again. The Russell has been a rock star the last 3 weeks, and it too, yesterday hit a new intraday high on this index, up a little less than the NASDAQ and the SPY, the S&P 500, year to date. But man, has it had, a heck of a rally. So if we want to just see from its bottom to the top, and all the indexes have just had this extraordinary push to the upside, over 40%. And how about our Dow 30? Similar, right? This one, new intraday all-time high yesterday, and up about 9% year to date. Yeah, Jay was saying the DC event was so good that he's considering traveling to New York. I love traveling to New York, so I'm willing to hop on a plane and go to any event in New York. I think they're great. Okay, so that's that. And how about our VIX? A little bit elevated, but I mean, still at 16.8, it's in kind of like the middle of the range where it's been trading most of the last year. Now, if we come over and look at indices, and this is just a public watch list, the S&P 500 sector indices. So just come down here to sector indices. And I have got a 4-week and a 3-month chart or list, and energy is in the top 3 in the last month. And if we want to see what this looks like, we had this big pennant pattern setting up. It broke out, came back to retest, and now, seems to be moving on up. And so could there be some opportunities for us here? And, I say, perhaps. So let's start by looking at Halliburton. So this is an interesting one because, this is a stock that is still down year to date, down 9%. It has a PE ratio. And if we want to see what that is on the Thinkorswim platform, if you come to the trade tab and click on this arrow, it'll tell you PE of 11.4. So that would put it in the value category, as many people would define a value stock. It pays a dividend of 2.78%. Now, a couple of things on dividends. Just because a dividend is being paid today doesn't mean it will continue to pay a dividend in the future, in real life. So let me just say that to start. What's the second thing? Is that dividends actually are not paid in a paper money account. So that's another difference between a live account and a dividend and a paper money account. But we can see here that we've had this pennant pattern setting up. And yesterday, it broke out with some gusto. We do have earnings coming up on the 21st. And so some might say, with this buy right strategy, some might want to be in and out prior to an earnings announcement. I'm sorry, I have to put you guys on mute for just 1 sec. Sorry, I just have somebody coming to work on my hot tub and he couldn't remember how to get in. So anyway, okay, so Halliburton, some might look at this and say, okay, it broke out. It could pull back, couldn't it? It could pull back and retest. And so why would I want to buy the stock now? Shouldn't I wait? And you know what? It would be totally valid to wait. But if we sold a covered call now and we were interested in adding Halliburton to our portfolio regardless, maybe because we don't have many stocks in, this sector, if it pulls back, what could we do? We could buy it back. And so this is an account. We have just shy of $31,000 in this paper money account. This energy sector seems to be coming around the bend. And this stock seems to be one of the ones that's helping it do that. If we came to the trade tab, so one, we want to be out before earnings. Earnings is the 21st. This expires, this expiration date is the 17th. So we'd be out prior to earnings. It's at 24.44. So what if we sold the 25? We'd only get, earlier this morning, it was a little bit more. It was about 90 cents. But let's say we get 85 cents. And you might say, 85 cents? That's not much. But just a minute. 85 cents, if I divide that by 24.43. Oops. 85 divided by 24.43. It's not nothing, actually. It's almost 3.5%. So if we look at that and say, okay, so if I sold the 25 and I was called out, how much could I make? So that's kind of question number one. So 23.63, if I'm called out, the most I can make, if you don't want to do the math, it's $1.37 or $137. Well, if I take that $1.37, I'm just going to skip the decimals, divided by 23.62, that's a 5.8% return for a trade we'd only be in for at most just over 3 weeks. So some might look at that and say, well, that's not too shabby. And then you might say, and I like this question, well, what if it pulls back to 23? Like, now what do I do? Because I've paid, $24.50 for the stock. So how is that a good thing? Well, if we're bullish and if our expectation is that if it pulls back to 23, that it might go up again, what could we do with the covered call? Well, if we come to the trade tab, we say, well, we could buy it back. Okay, well, how much could we buy it back for? Might be the next question. And so if we come to Theo Price and we say, okay, if I get paid 87 cents for this, the first thing we're going to do when we bring up the Theo Price tool is hit reset. We're going to say if it comes back to 23, so that's coming down in price by about $1.49. Okay, that would bring us back to 23. What would this be worth? About 34 cents. Now that's, if it's today. So let's go out to the 30th. And I'm just making up a date. I'm not saying that I'm expecting this to come back. I'm just saying, like, what if? This is a what if conversation. So what if it did come back? Well, I got paid 85 cents to sell the call. I could buy it back for 23. So I've made 50 cents. It doesn't make up for the $1.50 I'm down, but one, it beats a poke in the eye with a sharp stick. And two, if we're expecting it to bounce, what then might we do? Well, what we might do if we sell the covered call here, so we're going to buy the stock. Oops, sorry. I'm going to buy the stock here at 25. Sell the covered call, I'm buying the stock at 24.50, selling the 25 call. If it comes back down here, I'll buy the call back for whatever that's worth. And then if it comes back up, could I sell another one? Yeah, we could. Yeah. So John is saying, should we buy shares? Absolutely, because otherwise, if we just sell the call, that's a naked call. And if it were to gap up on some kind of news tomorrow, then we're in deep doo-doo. We have unlimited risk. And in this account, our rule is we can't invest more than $5,000 in any one particular opportunity or one particular trade or one stock. And we don't want to risk more than 500. So how much are we risking here? Well, we're risking $2,365 because the stock could technically go back to zero. Now, what if we said, well, we see support as being this $23. So if I took 23 times 0.97, I would have a stop potentially at 22.31. So now how much am I risking? I'm risking about $130 a contract. Okay. And I'm investing $2,364. So if I wanted, could I do two? We've got $7,000 in the account. Yeah, but I have a couple of other examples I wanted to do. So we're just going to do one contract. Now, how do we put in our exit? Well, we're going to change down here our advanced order to first trigger sequence, right click, create an opposite order. Oh, I don't know why this is, so we're just going to put the order in and then we'll put the exit in because it's not letting me customize it. So I'm going to delete that. Oh, it deleted the whole thing. Well, that's weird. Okay, if I come back to the trade tab, does it show me one? Okay, I don't even know what to tell you. We're going to delete it for the 5th time. And I just rebooted my system, so I don't know what to tell you. There's gremlins in the system. So we're going to put this in. And it's My drop downs aren't working today. So we're going to put this in the buy right covered calls. Okay, that's where it's going to end up once it fills. There we go. So now I want to come and look at a trade that we currently have on the go. And we're not going to look at those today. So it's our buy right covered call on Baker. And we're up 5.53% on this one. And, you know, it's trading at 49.96 and we have a call at 47. Now, I looked at rolling up to the 48 call because what are our choices? Our choices are we have 3 weeks left to go. If we stay in this for the next 3 weeks, we've got, you know, how much more could we make? We're at 46.34. The most we can make is 47. We're already up $241 or 5.5%. We could make another $65. And we might be in this for 3 weeks. We also could end up losing money because what the market giveth, the market taketh away. So we could stay in the trade. That's option one. Option two is we could roll it. And I looked at, you know, so here's how we'd roll it. We'd come in, we'd say create a rolling order, and we're rolling it out to November. So we could make another $90 if it stays above 47, but now we're in it, you know, until Thanksgiving. So that's a possibility. Now it'll let me do this. We could roll it out and up. Or we could say, you know what, that's $5,000 we could use to place other trades where we might make more than $120. But I like to run a semi-democratic class. Sometimes I just make the decision. So the question is on Baker, and I'm going to set up a little poll here. Do we take the money and run? Cue Steve Miller. Or, you know, the other option is, do we roll it? And if we roll it, we could make another $115, but now we're in it potentially till November. Okay. Or do we say, hey, you know what? We've made $242.50 on this thus far. That's, you know, $65 away from our max gain. And, you know, that's a double in baseball parlance. So we'd like to take that money and run. We're going to take our position in Hal, and we're going to move this up. So move it to a group. Which group? Our buy right covered call. And we're going to actively manage this. Now, we wanted to put in a stop on this, didn't we? So how do we do that if let's say we forgot? We're going to create a closing order to close out the whole position. And let's see if it'll allow me to change it here. Well, now it's working. Well, what in the Sam Hill? I have no idea what's going on. We're going to roll with it. Maybe the system wanted me to demo this for you. So let's say that that's what's going on. Okay, so we're saying if Halliburton goes below 22.31, not going in the right direction, 22.31, we would like to buy back the call that we sold. And why are we doing it this way? Because we don't know what that call will be worth, and then exit the position. Okay, so this is our exit, but we're only going to exit when, if and only if Halliburton goes below 22.31. Okay, so we're going to put that in. And always want to read, like, is there a guarantee that we're going to get out at this price? There is not. You know, if it gapped down, we'd be out at a lower price and we'd be sad. Yeah. Yeah, somebody's saying, yeah, Sam Hill is getting around. Okay, so that is Halliburton and Baker. So far, 85% of you are saying take the money and run. Okay, so let's go place another trade and then we can come back. And so how did I, find these energy stocks? Because we looked at the energy sector and said, hey, this had a diagonal, like we had a pennant set up, we had a breakout to the upside, came back to retest, and seems to be moseying on now up the hill. So one of the things you can do is create a sector watch list. And rather than going through the details, you want to subscribe to the Trader Talks channel from Schwab Coaching on YouTube. And when you do that, it gives you access, to all these playlists. And when you first get in, whatever's happening first comes up. But if you come to playlists and then scroll down, I created one which is just a bunch of additional resources called Trade Management Mini Sessions. So I've got a bunch of short videos on candlestick patterns. Then if you want to see an example trading plan for the buy right covered call, here's one that you can use as a framework from which to create your own trading plan. But if you scroll to the very bottom, these turquoise are, tips on using the Thinkorswim platform. And the one at the very top is how to, create sector watch lists using a super quick scan. Okay. So, because you're going to say like, well, how did you create that watch list? So I'm circumventing the question. So we're going to come to my personal watch list, and you can see here that I created one for each sector. And it took about like a minute to do each one. So the energy sector, that little whirligig in front, says that we're going to go and rerun this scan and populate it in your watch list every time you click it. So I'm going to sort by symbol. So it just, and if we look at APA, well, what's been going on with APA? We had this like inverted head and shoulders pattern, broke out, came back to retest. And now, it looks like it's just like moseying on up the hill, as I like to say. And so here's one that, and it's one of the nice things about APA is it's in our snack bracket. What do I mean by that? What I mean is, like, if we were looking at VLO, we might or might not have an opportunity, but it's $173 stock. So a position would be $17,000. What's our max position size? Well, our max position size is $5,000. And so this at $24.94, $2,500 plus if we sell a covered call, that's, that's kind of a beautiful thing. We can afford to do that. Okay. Now I'm going to end our poll because we're going to do another poll on this one. Today is our poll day. But we had 88% saying take the money and run on Baker. And we had 50 of you vote. So, I know we have 200 and some people live with us on the call, but thank you for participating. And also thanks to like so many of you and a lot of you I've had the chance to meet, but like Riceberg and Janelle and Mary Burns and Will and John and the rest of the gang, Sharon and Josh, and thank you all for making this class so interactive and being so participatory in the chat. So if we look at this and we say, okay, it's at $24.94, it's almost at $25. Now, some might say, like, if you think it's going to continue to go up, what person in their right mind would sell the at the money call? Well, you might say, well, I kind of like this at the money call. I know, like, it only has to go up a nickel for us to be called out. We have a 98% probability of this of this coming up and kissing 25, a 47% probability, and this is a juicy premium because the implied volatility is at 48%. So like $1 on 25 would be what? Well, let's bring up our little calculator. This is $1.12. or $1.10. So if we say, okay, if I take 1.1 and divide that by, let's just say 25, that's 4.4%. So, raise your hand if you think 4.4% is a terrible return for a trade you might be in for 23 days. My hand is not up. Like, I think that might be an acceptable return. And so if we looked at that and we said, okay, we could do that, but you might say, well, hey, there's lots of volume out here at 27.50 or at 26. Like, I know I'm going to get paid less for this option. So let's say I get 70 cents instead of $1.12, I get 40 cents less, but I make $1 more. And the bid-ask spread is still only 3 cents wide. And the return, now your probability goes down from 47% of being in the money to 34. And you may want to run all your numbers and say, okay, 23.84, I could make $1.14. Oh, sorry. I could make 115. And if I divide that by 23.86, okay, I didn't do that, but it's almost a 5% return. Okay, so what if instead I sold the 26? Well, now I'm paying $24.28. I could make $1, what is that, $1.72? And if I divide that by 24.27, that's a 7% return. But what is our probability of getting that 7% return? It's 13% less. But like I said, it's a partial democracy here. So, do we go with the higher probability, still a nice return, 25, or do we sell the 26? And I have to ask a binary question. I can't ask an either or. So on APA, do we sell the 25 call? Yes or no? Or do you want to go for the bigger money? And there's no right or wrong answer. But there's our poll. Okay, so do we sell the 25? And the other option is, if you vote no, you're saying, I want to sell the 26. And it just depends. Like, if you're in this because you're going to the event in Anaheim in November and you want to bring a friend with you and then go to Disney afterwards, and so you want some money to blow at Disney, you're looking for, the opportunity to make some extra cash that you want to take out of your account. Like, I'm just making stuff up here, because the 25 is selling it closer to being in the middle of the road, right? Right. Okay, now in the meantime, the results from our last poll said take the money and run on Baker. So we have an exit in place. How do I know? Because we have these little chiclets here. So we're going to come down to Baker and we're just going to cancel that order because it's got a condition on it. And we want to just exit condition free. So we're going to say create a closing order. We want to buy this back, 46.39. Because we want a little more cash. We want to take the profit from an unrealized gain to a realized gain. Okay. There we go. Fait accompli. All right. You want to do one more? Yeah. Yeah. So I was looking at going to Disney and I went to see a movie with some friends last night. Oh yeah, I'd love to go to a baseball game. Maybe I'll do that. I'll have to check the schedule because I would love to see a baseball game too. My son-in-law grew up in LA. Actually, I think it was Valencia. So big fan. His family's divided, but he's on the side that is an LA Dodgers fan. So it would be great, even though that team isn't doing so fantastic this year. Okay, so Devon. Devon is door number 3. Okay, so with Devon, does this look kind of similar to what's been going on with the other stocks in a way, and what's been going on with the energy sector? Variations on a theme, right? So we had another pennant pattern, broke out, came back and kind of retested. If we extend this, support line and hit that support line twice and seems to be bouncing. And remember, this isn't, this is a strategy. This is a dating strategy. This isn't, we're linking arms and walking down the aisle, for years and years, right? Yeah. So, but this is bouncing. And again, like, could we sell this, 36 call? And why not sell the 37 or this 37.50? We could. You guys are saying sell the shorter call on Devon. So, or sorry, was that APA? On APA. So maybe we do that. We'll do the longer one on Devon. So, but let's come out and look at it and say, okay, we've now got some extra cash in here. Again, this is in our snack bracket because it's $50 or less. If we look at the 36, just coming out to the October monthly, we've got lots of volume, over 1 million shares traded a day, which if you're going through the checklist, is the market uptrending? Is this sector uptrending? Is this stock now uptrending? Check, check, check. Does it trade more than 1 million shares a day? Is there lots of volume on the contracts? Is there a tight bid-ask spread? Check, check. And then if we look at this, is the juice worth the squeeze? Well, if we look at this, $1.08 divided by this current price, 35.57, that's a 3% return. Not too shabby. And how long would we be in this? About 3 weeks. And, it only has to go up 46 cents. But, so if we add another 46 cents to that, what might our return be? Well, $1.53, which is 36 minus 34.47 divided by 34.47. So that's 4.5%. Where if we come out to this 37.50, we're only making 54 cents. So we're giving up more than half the premium. We're being paid less than half the premium. We've got almost 5,000 contracts here, but the odds of it expiring worthless, 74% versus, 57. So it just depends on what you want. Actually, I've changed my mind. We're going to stick with this one. This, let's plan on being called out. Then could we do a wash, rinse, repeat? If we wanted to, we could. So if we look at this line here, we could say, okay, here's our recent low, 33.58, 33.58 times 0.97. We're going to put our stop at 32.57 on this. So single order, first trigger sequence, right click, opposite order. Will it let me do this? Yay. Good till canceled. Our disappearing, reappearing sprocket that brings up our conditional order page, 32.57. Confirm and send. Oh, now I can put it in the buy right bucket. So we want to exit this entire position, buy back the call, and sell the stock if Devon goes below 32.57. We're paying $34.50 to get in, so we're risking about $200. And, again, no guarantee we're going to get out at exactly the price we asked. No guarantee we're going to be called out either. But there we have it. Okay, and we're going to go back and put our APA trade in quickly. Oops. And we decided to go with the 25 call. So we're going to click on our 25 call. We're going to buy covered stock. And where are we going to put our exit? Well, we might say, hey, here was a recent low here at $23. So we'll go 3% below that. 22.31. Oh, there's Devon. Opposite order. Whoops. Single order. Got to do it exactly in order, right? Single order, first trigger sequence, right click, opposite order, market, good till canceled, sprocket. Our exits at 22.31. Does that make sense? Where's the stock trading? 24 and change. Okay. Buy right covered call group. We want to buy one covered APA. And we want to exit if it goes below 22.31. The most we can make, $115. It's saying if this went to zero, it's not recognizing our stop. But, you know, again, no guarantees with a stop. Fire in the hole. So we exited our buy right on Baker, and we opened 3 new buy right covered calls, all in the energy sector: Halliburton, Devon, and Apache. So guys, thank you for being with me. If you haven't already hit the like button, it helps move this class up in the trading algorithms on YouTube. So would appreciate you hitting that. It also, make sure you follow Kevin and I in the land of X. Kevin Horner CS, Barbara Armstrong CS, and make sure you're following the real thing. And yeah, subscribe to the channel. So lots of great content still to come. Appreciate having you guys on board. Appreciate having Kevin in the chat. Excuse me, and the guys behind the scenes. So lots of great stuff still to come. We'll see you tomorrow. I'll be filling in for Kevin, actually. He's planning a pretty epic family event, and so I will be covering after the close. Take care, and bye for now.